Greetings from US Stock Express. Let's dive into the market action for today, December 11th, 2025. Could a single federal rule soon govern the entire AI industry? Is a massive $21 billion AI deal proof this boom is just heating up? And why are big money investors suddenly pouring billions into everything from cruise ships to luxury goods? We've got the answers. Let's get started. All right, let's get straight to the numbers. The Dow Jones led the charge with a solid gain of 1.47%. The small-cap-focused Russell 2000 also had a great session, climbing 1.31%. The broader S&P 500 inched forward, adding just 0.13%, but it wasn't all green on the screen. Tech took a little breather, with the Nasdaq 100 dipping 0.57%, so a bit of a split decision for the markets today. Starting with a major policy shift. President Trump has signed an executive order to create a single federal framework for AI regulation, a move designed to override state laws. This is a huge win for tech companies that have been lobbying hard against a confusing patchwork of state rules, arguing a national standard is key for U.S. competitiveness. This executive action is the concrete step behind that headline. The order's goal is to centralize AI regulation under one federal umbrella, effectively sidelining various state-level laws. It's a significant power play that will shape how this critical technology is governed. Shifting gears from policy to retail, Lululemon is in the spotlight. The stock surged over 10% after a strong Q3 earnings beat, but the bigger story is CEO Calvin McDonald's planned departure. Investors appear to be cheering the change at the top, hoping new leadership can revitalize the brand after a challenging year of declining profits and softer sales here in the Americas. Now over to the payments giant. Visa, its stock jumped over 6%, fueled by a bullish upgrade from Bank of America. Analysts pointed to attractive return potential and manageable regulatory risks. This positive momentum lines up with Visa's strategic push to enhance premium travel benefits in the Asia-Pacific region, a key growth market, by partnering to offer instant lounge access, a smart play to lock in loyalty with high-spending travelers. Staying in tech, but with a different story, let's talk Broadcom. The chipmaker delivered a blockbuster earnings report that crushed estimates. Even on a down day for the Nasdaq, Broadcom revealed surging AI demand, record revenue, and finally named its mysterious $10 billion customer, AI lab Anthropic, which has now placed over $21 billion in orders. The company also raised its dividend and issued strong guidance, though the stock's initial after-hours pop faded, showing even stellar results can't completely shake the recent market jitters. Let's pivot to a different sector now with the Mosaic Company. This fertilizer giant is seeing a surge of interest from institutional investors, with several big money funds significantly boosting their stakes. This vote of confidence from the pros, combined with the company's solid dividend, is helping the stock finally sprout some green shoots. Now let's set sail with Royal Caribbean. The stock surged after the company announced a major capital return program, including a new $2 billion share buyback authorization and a $1 quarterly dividend. Powered by a strong financial position, this move signals robust confidence in the future and delivers immediate value back to shareholders. Smooth sailing indeed. Its competitor, Norwegian Cruise Line, is also making waves with a mix of strategic moves and analyst debate. The company named a new president for its flagship brand, focusing on commercial performance. However, the stock's journey has been choppy, facing analyst downgrades over Caribbean supply concerns, yet also reporting one of its strongest booking periods on record. A sign that underlying consumer demand remains very strong. And completing the cruise line trio, Carnival is entering a crucial new chapter. The focus is officially shifting from pure survival to financial strength, with the company generating record profits and steering toward consistent free cash flow. This is fueled by strong pricing, cost discipline, and a strategic pause in new ship deliveries for 2026, which should help turn those earnings directly into cash. Finally, let's look at Tapestry, the parent company of brands like Coach and Kate Spade. The stock jumped 6% as major institutional investors significantly increased their stakes, signaling strong confidence in the luxury retailer's future, even as some company insiders decided to cash out shares. That wraps up today's market update. Thank you for watching. Stay informed and make smart investment decisions. We'll see you next time.